In this presentation, we will continue on with part 9 of our partnership comprehensive problem. This time we're going to be entering the purchase of equipment into our tax return, into our tax forms. Here we are in our 1065. You'll recall in prior presentations that we have entered into the first page the income statement information that's going to give us our net income, in essence, on a book basis at this point, because we haven't made any adjustments to it. We've also entered on line 5 or page 5 the balance sheet, and the balance sheet is currently in balance as well. So we want to always kind of check that whenever we do one of our adjustments. Now I'm going to go back to our Excel worksheet, and we're concentrating on this issue here. We had the equipment account. Let's go ahead and make that green. I'm going to make this green, and I'm going to ungreen all of the other items. So I'm just going to have the yellow items, which are the ones that we need to work on now. So I'm going to take all these other items that are green. Those are all good now, so I'm going to ungreen those. And I typically make green the one I'm working on at the current time. So I'm going to right click on that. And there's you don't have to use green. That just happens to be, what I do. So I'm going to go and make this unfill. So those are back to white. And now I just need to fix those yellow ones. The green now represents the one we're going to be working on. So we're going to be working on the equipment. And you'll note, we remember that we kind of forced that one. That's property, plant, and equipment. If I go back to the forms, we're going to go back up top. And this 300, if we go back to the forms, to the detail, and take a look at the balance sheet information on the federal side, and we scroll down, note it's got a little asterisk. It's not an override, but it's a little asterisk saying, hey, the system might calculate that for you, is basically what I'm interpreting that to mean. And that's what we want it to do. We would like to say, hey, the system sees what the beginning balance is, and they see any kind of purchases that we have made, because we're going to enter that into the system as property, plant, and equipment. Therefore, this ending balance should calculate for us. So let's see what that would look like then. I'm going to go ahead and enter the difference or the purchase that was made, and we'll then delete this one to see if it turns out to be the same number, which it should. Now, how would we know if we were to get the client detail and we looking at this? We're going to say, the equipment last year and this year is less, so something happened there. So then we're going to have to get the detail for the equipment, which would be like the general ledger. Within the general ledger, there shouldn't be too much activity because it's a big equipment account, so not too many purchases and sales of equipment typically. And we're going to then get the detail on whatever purchases of equipment there are and sales of equipment. So, and first we're going to be dealing with a purchase. In this case, there was a purchase and a sale. Now we're going to be dealing with the purchase item. So if we'd get the detail on that. I'm going to scroll back down and say within the GL, we got the detail. Here's the new item that was purchased. The cost was $45,000. We're going to put it on the books under makers, 7-year for taxes. For book purposes, not bud, but book purposes, it's going to go on as straight line 7-year. We purchased it on 6/15. So let's do that. We're going to go back to Lacert, and we're going to enter this into the same area we entered the depreciation schedules. It's going to be depreciation. In this case, we're focusing right now on the property, plant, and equipment, the asset. So that's going to be the cost, and then it's going to calculate the depreciation on it. And I'm going to add this, and then I'm going to call it equipment 4. I know these aren't great names for the equipment, but we're going to say the form is going to be going to the 1065. And obviously in real life, you'd want to, if it's a forklift, you want to label it a forklift. You may even want to put the serial number of it on there. Distinguish them apart. If you had 3 forklifts, you want to put them on separately, because when you sell them, you're not going to be able to sell them all, in a group purchase. So those are best practices. Here's an example problem that's not very best practice, but that's okay. We're going to go down here and say that this is going to be the machinery and equipment, and we purchased it this year. So this year being 06/15/19, and the cost then is going to be, what did we say the cost was? It was $45,000. $45,000. And then the method we're going to use for the tax method, we're going to be using the makers 7 years. So I'm going to say makers 7 years. Is that the one? That's what I want. That's what I want. And then the 179. No, I'm going to allow the system to calculate the 179 and any prior special depreciation, and it should do that usually in a format that's going to be the most advantageous format. So if it applies, it'll typically take that before then taking the normal depreciation. Now, if you're in a situation for some reason that you don't want to take as much depreciation as possible, then you may want to basically override some of these. But typically, you'd say I'm going to rely on the system to, if it qualifies for the 179 and special, to basically do those calculations in a way that would generally be the most effective way. So that's all I'm going to do. I'm going to put the 45,000 there. If I go back up to the forms then and look at our depreciation schedule. So here's our depreciation schedule. Let's look at the regular one. And now we have our new piece of equipment on the books now at that 615. Now if I look at the total cost, it adds up to this 360, which doesn't tie out to what's on the balance sheet, which means there's something else involved here, which is a sale. We're going to sell the $60,000 one. So in other words, if I was to go back to our balance sheet here, we're going to go to our balance sheet, and I really want to delete this and let it calculate for me in the system. But if I do that, and I go to the forms, and I go to the 1065, page 5, the balance sheet, then it puts it up to 360, and that's too high because that's going to put us out of balance. So it's supposed to be the 300, so I can't do that yet. There's something more going on. So that's calculating correctly, because if I go to that 360, that ties out to what's on the depreciation schedule here, 360. So that it's doing that right, but this depreciation schedule doesn't tie into what's on the ending balance sheet. So there must be something else happening. And the other thing that's going to happen is we're going to sell this piece of equipment, which will bring it down to that 300,000. So I can't do that yet. I can't fix that yet. I'm going to put this back to 300. I'm going to force it for the override. And then I'm going to go back over here, and that's okay. And then I'm going to go back to my 1065, page 5, and that puts us back in balance. So I didn't mess anything up. So that's fine. That's where we were. Then I'm going to go back to the depreciation. Now the book should be different. Notice if I don't put anything different in the book, then it's going to be using basically that same 200 double declining. I want it to be straight line, 7 years. So I'm going to change that. So I'm going to go back to the detail. We're going to go back to the depreciation. So we're going to go to the depreciation. I'm going to be picking up that fourth one. I'm going to scroll down to the book information. So I'm going to go down here to the book information. Then we want the method, and that method should be, I'm going to go all the way down. And I don't want to take the maker straight line because it's a little different. It has a half-year convention in it and whatnot. So it's pretty similar, but not the same. I'm just going to take the straight line. That's as straight a line like you can get. And then I'm going to put it's a 7-year. And then we'll go back up to our forms. And there we have it. So now we have the equipment on the books, 45,000, and it's going to be the straight line, 7-year, and that ends up being the calculation of the 3,750 in this case. So we haven't quite accomplished our goal of being able to go over here and un-yellow this, or make this now back to no color, or white if no color clear would be, whatever. So we can't do that yet because we have a sale. So next time we're going to deal with the sale, and then we'll get into the depreciations. Before we push forward, we're going to make one more adjustment. We're going to say the depreciation schedules from the client here, this number is going to be slightly different. So I'm going to adjust the current year depreciation related to this 255,000 from the 36,429 to the 28,571. So to do that, I'm going to go back over to the data. I'm going to go into the depreciation schedule. So we're going to go to the depreciation. We want to be picking up the item with the, let's do that again. We're going to the depreciation, and I'm going to pick up the item of the 255 and then scroll down, and I'm going to look for the book depreciation. We're looking for the book information. Did I just pass it? Yeah, there it is. And this is the book depreciation. We want the current year. I'm going to override the current year for our purposes here. It's going to be the 28,28571. So 28571, going back to our forms for the book depreciation. This hasn't affected our tax return yet, but it will once we make the adjustment for it. Then over here, you can see that these are going to be the numbers we have so far. So that's going to be our numbers so far on the book side. Then we will make an adjustment for a sale that will happen that will alter these numbers a bit as well.